The Shanghai Composite Index was one of the few Asian markets to inch higher today as a general sense of gloom persists among equity investors. It managed to climb a bit less than 1/5%, while the Shenzhen component declined by 0.75%. Investors are still waiting for signs of a solid economic recovery, according to market watchers. One thing getting a lot of interest was the new index that was launched yesterday for Chinese A-shares, the CSI A50 index. This tracks some of the most well-known companies on the mainland markets, but unlike the CSI 300, it doesn't include so many from traditional industries. It's being billed as better representing the modern Chinese economy and the sectors that the government really wants to focus on. We have some expected big names on the index, including China's most expensive stock, the liquor maker Guizhou Maltai. There's also electric vehicle battery maker CATL, security system maker Hikvision, Ping An Insurance, and the drug maker Wuxi Aptech. According to the regulators, they've received applications from at least 7 mutual funds wanting to create ETFs that track the A50 in just the first 24 hours after its launch. The A50 itself, though, closed today a little bit lower. Automaker BYD, also on the A50 by the way, edged higher after being confirmed as the top-selling maker of pure electric vehicles in the world, knocking Tesla off that pedestal. BYD shares rose by 1/3%, and financial journal Eatsai has reported that the company is planning big cash bonuses to Chinese car dealerships for hitting sales targets, bonuses that are expected to total 2 billion yuan. More broadly, Asian stock markets were pretty grim on Wednesday as hopes faded of deep and early cuts to interest rates by the US Federal Reserve. The markets are waiting on both the latest Fed minutes and US jobs data. But that prompted a slide in tech stocks, which left the Hang Seng down 0.9%. PC maker Lenovo was one of the biggest decliners, shedding 4.5%. But there was some reprieve for Chinese video game stocks after reported personnel changes at the Chinese gaming regulator. New proposed rules designed to reduce spending on video games had sent the sector into a bit of a spin, but gaming giant Tencent rose 1.3%, while rival NetEase was up almost 1%. The tech-inspired market slide today was felt heavily in South Korea as well, where the Kospi 200 shed 2.6%, the biggest fall for that index since late October. Shares in Samsung Electronics were down 3.3%. Japanese markets will be back from their New Year's holiday tomorrow.